Imagine the Colosseum 2,000 years ago. The crowd roars, dust rises, gladiators grip their swords. Some hope for one lucky strike that wins glory. Most fall quickly, forgotten. Fast forward to today, and the Colosseum has taken a new form. Screens and charts. The spectators are investors watching leaderboards. Among these modern gladiators, one man stands apart, Patrick Nill. Patrick doesn't dazzle with indicators splattered across charts. He's not the gambler praying for the trade that changes his life. He's the gladiator who knows the arena, entering with two weapons sharpened to perfection: volume profile and market profile. With these, he fought through the World Cup trading championships, achieving 247% in one championship and 198% in another, securing 2 world titles and 5 top 10 finishes. While others swing wildly, Patrick strikes with precision and discipline. Welcome to Trading Psychology Stick, where we explore elite traders' minds and methods. Remember, this is educational content, not financial advice. Every trader's journey is unique. Past performance never guarantees future results. His journey didn't begin in triumph. As a teenager during the dot-com bubble, Patrick watched markets make people rich overnight. He was too young to join, but the fire was lit. Years passed. He built a company, but the market's pull never left. In 2018, against doubts from family and friends, he sold his company to trade full-time. They called it reckless, foolish. Maybe it would have been if he hadn't discovered how to transform simplicity into an edge sharper than any complex system. Step into his world and see why he thrives. Picture hundreds entering the World Cup yearly, many shooting to 200% gains in a week, only to vanish. Lucky strikes, wild gambles. Patrick's edge is different. He doesn't chase glory with single strikes. He builds consistency, trade after trade, proving luck fades but structure survives. That's why he remains while others burn out. Here's the shocker. His strategy isn't hidden behind algorithms or hedge fund formulas. It's about seeing the market as an auction, a battle between buyers and sellers. By reading volume and market profile, Patrick identifies where value is created, where imbalance emerges, where opportunity hides. Not glamorous, but devastatingly effective. The market rewards those who know when to strike and when to step back. So ask yourself, would you be the trader chasing one lucky swing, or the strategist who knows how to endure and rise? Next, we'll walk into Patrick's strategy, the market profile edge, and see how this simple tool turns chaos into clarity. The market profile edge. The arena is loud, dust swirling, traders swinging recklessly. Most won't last, but one fighter moves differently. He studies the ground, the crowd's rhythm, how opponents shift weight. He knows the arena's structure and exactly when to strike. This is market profile, seeing not just price, but the market's architecture. Market profile isn't another indicator, it's the battlefield blueprint. It maps how price spends time, building value. Imagine an ancient bazaar. Merchants gather, prices are shouted, eventually agreeing on a fair value zone where most trades happen. Brief flares occur above and below, but most business happens within this fair ground. Market profile visualizes this, revealing the value area, high, low, and point of control. The market's heartbeat. Here's how it works. Last Tuesday, when the S&P tested 4,583 times, most saw resistance. Patrick saw different. The value area shifted from 4,560, 4,575 to 4,575 to 4,590. The market wasn't rejecting, it was accepting new value. That shift told him everything. Buyers won the auction, next move higher. By week's end, the S&P pushed to 4,625, exactly as structure suggested. The champion wields market profile like a general wields maps. He asks, where's the balance? Where's imbalance? When buyers and sellers can't agree, when price pushes outside value and won't return, trends begin. The battlefield tilts, and skilled traders know to attack. Too many fixate on the last candle or shiny indicators. They forget the market's an auction, a living crowd negotiating value. Patrick never forgets. When price tests value edges without breaking, he knows it's balanced. No reason to risk capital. But when balance cracks, when volume shifts supporting new levels, he recognizes real opportunity. Think of it. Market profile is like watching chess where most are blind. They see one piece move and react. chasing pawns without strategy. Patrick sees the whole board. He knows when the center's controlled, flanks are weak, when sacrifice is bait. This vision earned him World Cup podiums. He doesn't trade excitement. He trades what structure confirms. Most traders think they need more information, tools, screens. Patrick wins championships with less. While others drown in complexity, he finds clarity in simplicity. Like Bruce Lee's philosophy, I fear not the man who practiced 10,000 kicks once, but who practiced one kick 10,000 times. The critical twist, Patrick's market profile use isn't about prediction, but preparation. He never says, the market will do this. He builds scenarios. If price holds inside value, stand aside. If price rejects value and volume confirms, engage. It's disciplined dance, keeping him alive in an arena devouring the impulsive. Now, you've seen how Patrick reads the battlefield structure. What about hidden footprints of giants? How does he detect institutions quietly loading weapons? That's where volume profile comes in. Next, we'll uncover how Patrick combines it with market profile to see not only the arena's structure, but power flowing through its veins. Before continuing, consider, have you entered trades because setups looked good without knowing why? Comment structure if you're ready to move beyond guessing and start seeing the market's true architecture. The volume profile. Filter. The battlefield pulses beneath the roar. This pulse isn't swords clashing. It's the crowd's heartbeat. In markets, that heartbeat is volume. If market profile shows the battlefield's shape, volume profile reveals every strike's strength. Volume profile is deceptively simple. It doesn't tell stories with patterns or indicators. It measures where most business is done, where money's truly committed. Picture the arena. Cheers erupt at moments, silence at others. Loudest cheers show where fighting's fiercest. In trading, these are high-volume nodes, zones where big players step in, leaving footprints. Quiet pockets are low-volume nodes, fragile zones where price cuts through like blade through cloth. A real example from Patrick's trading, March 2023, crude oil trading around $73. Volume profile showed massive high-volume node at $75 from previous consolidation, but volume void between $73.50, $74.80. Patrick knew if price broke above $73.50, it'd rush through that low-volume zone. He positioned accordingly. Within 2 sessions, oil shot to $75, pausing exactly where the high-volume node predicted. That's 2.7% captured not by luck, but reading volume's footprint. The champion doesn't guess. He listens. When price approaches high-volume nodes, he knows armies gather there, where markets agreed to fight. Price often stalls, dances, reverses. When pushing into low-volume voids, Patrick knows these are weakness corridors, where price rushes unopposed. Mapping these patterns, he filters false battles, zeroes in on ones worth fighting. Too many stare at indicators that repaint, telling different stories daily. Patrick's volume profile doesn't lie. It's history carved in stone, showing exactly where capital's blood spilled. When he sees fresh volume building outside old value areas, he doesn't ask if it's time. He knows it's the imbalance moment, the signal the battlefield shifted. Imagine standing with Patrick in the arena. The crowd surges louder in corners, quiet in others. He doesn't just hear noise, he interprets. He points where crowds grow frenzied. That's where they're committing, strike or defend there. He points to quiet sand. If fighting moves there, it'll be quick, brutal, decisive. This transforms volume into vision. He doesn't treat every breakout equally. He asks, is volume confirming? Is the crowd truly behind this push, or just a faint collapsing under weakness? This filter prevents swinging at shadows. Patrick says, volume's the only thing that cannot lie. Price fakes you out, news misleads, but volume shows where money actually changed hands. This saved him countless times during false breakouts where price pushed new highs, but volume stayed anemic. No volume, no trade. Simple. Volume profile isn't glamorous. It doesn't scream predictions. It whispers probabilities. But in games where survival matters more than spectacle, probabilities are everything. Institutions can't hide where they bet. Volume exposes them. Read those footprints, you're no longer fighting blind. Now you've seen Patrick pair market profile structure with volume profile's heartbeat, creating map and pulse guiding every move. But there's one more piece. rules preventing him from falling into subjectivity's trap. Next, we'll step into his code, fixed price action rules, keeping his sword steady when chaos tempts wild swings. Fixed price. Action rules. The arena deceives. To untrained eyes, it's chaos. Shields clashing, sand flying, random lunges. But seasoned gladiators know survival comes from discipline, from unbreakable rules even when crowds scream for blood. For Patrick, those rules are in price action. Unlike traders who bend lines until they fit desired stories, Patrick treats rules like arena's stone walls, immovable. Price action is often subjective playground. One trader sees upward trend line, another downward. One calls breakout, another fake out. Same chart tells 100 stories. Patrick strips that away. He doesn't allow redrawing, second guessing. He sets fixed rules. Candles must meet exact criteria, breakouts align with defined levels, stops placed in same logical positions. If conditions aren't met, no trade, no exceptions. Here's one exact rule in action. For engulfing candle reversals, Patrick requires 3 conditions. Engulfing candle closes beyond value area, edge, volume exceeds 20-period average by 150%. Prior trend shows 3 consecutive lower lows or higher highs. One condition missing, trade doesn't exist. Last month, this kept him out of 7 false EUR-USD reversals that trapped countless traders. Imagine the difference. Most gladiators swing at shadows, hoping opponents fall first. Patrick waits for openings he's trained for thousands of times. When appearing, he doesn't hesitate. Strikes are clean, rehearsed, devastating. If never appearing, he does what most can't bear, walks away without raising sword. That discipline is true armor. Why matters? The trading arena isn't just dangerous when losing. It's dangerous fighting battles that never mattered. Subjectivity tempts into avoidable duels. Patrick's fixed rules shield against temptation. He doesn't redraw trend lines justifying trades, doesn't widen stops because maybe it'll return. Rules are stone pillars never moving, even when crowds chant louder. This rigidity sounds limiting, but is liberating. With fixed rules, Patrick frees his mind from interpretation noise. He doesn't debate whether setups qualify. He knows instantly, yes or no. That clarity conserves focus for battles mattering, trades aligning with both profiles. A struggling trader asked Patrick, "Don't you miss opportunities with strict rules?" Patrick's brilliant response, "I'd rather miss 100 uncertain opportunities than take one trade breaking my rules. Markets offer thousands yearly. I only need ones matching my edge perfectly." Here's the paradox. Embracing strict rules that gains flexibility. When structure and volume confirm, price action rules click. He acts decisively without hesitation. Nothing left to doubt. Rules already decided. Picture him again. While others waste strength on feints, Patrick stands steady. Rules are his code, honor, defense. When true moments come, his blade moves without doubt. That's fixed price action rules essence. But what when chaos presses harder? Temptation to bend rules grows. Next, we'll explore the eternal struggle between objectivity and subjectivity. How Patrick built mindset keeping him from betraying his system, even when battlefields demand blood. Think about your last 5 losing trades. How many broke rules you already had? If honest, comment rules below, because recognizing this pattern is the first step to breaking it. Objectivity versus subjectivity. The battlefield fills with noise, spectators screaming their truth versions. One yells, "He's winning," another, "He's doomed." Same fight, 1,000 interpretations. Isn't that exactly markets? Same chart posted, one trader swears bullish, another bearish. Both convinced, both defend passionately, both might be wrong. In chaos, Patrick chose differently. He vowed never swaying by interpretation, only by objective, measurable, repeatable rules. Subjectivity seduces. It whispers, maybe bend the line slightly, maybe this level's close enough. Gives control illusion because you justify anything. With every justification, you dig deeper into inconsistency. Crowds love it. Subjectivity feels exciting, making bold calls, trusting gut, believing you see what others can't. But Patrick knows markets punish hubris. Swing on feelings instead of proof, you'll eventually bleed out. A specific example Patrick teaches. 2 traders view same Bitcoin chart. Trader A draws trendline from wicks, sees breakout at $42,000. Trader B draws from bodies, sees resistance at $42,500. Both right by own rules, but only one consistent over time. Patrick's solution: define trendline rules advance. Always from bodies, always 3 touches, always 4-hour time frame higher. No exceptions, reinterpretation, this time different. Objectivity is merciless, but fair. Doesn't care about hopes or fears. Doesn't bend to ego. Objective rules either trigger or don't. Levels either tested by volume or not. Patterns meet criteria or fail. Patrick treats rules like arena's stone walls, unyielding. They don't change by mood or because markets look tempting. If structure and volume confirm, price action matches checklist, he acts. If not, stands still, no matter crowd roars. This discipline creates unexpected advantage. While others burn energy debating, hesitating, arguing online, Patrick conserves focus. He doesn't argue with markets, he listens. Objectivity is translator, stripping noise, showing only undeniable, not glamorous, not dramatic. But in arenas where survival means lasting years, it's the only way. Patrick tracks everything, every trade logged with exact triggering conditions. After 100 trades, reviews. Did objective rules produce edge? Data doesn't lie. In 2022 championship, objective setups had 68% win rate, 1.8.1 reward risk. Times he bent rules because felt right, 31% win rate, negative expectancy. Numbers taught what emotions couldn't. Objectivity wins, subjectivity kills. Here's the secret. Objectivity doesn't make you cold, robotic. Makes you free. When stopping bending rules that's fitting bias, you stop carrying regret weight. No what-ifs or should-haves. Only setup met rules, took it or didn't, passed. That clarity worth more than indicators, secret strategies. It's peace letting you return tomorrow, unscarred by self-doubt. But battlefields are vast. No fighter survives alone forever. Even with discipline, battles are grueling. How did Patrick avoid isolation destroying many traders? How transform lonely pursuit into brotherhood sharpening edge? Next, we'll step into his team story. See how finding tribe turned solitary struggle into collective strength. Multi-market application. The battlefield shifts shape. One day stone, another sand, another iron. Each arena has own rules, dangers. Surviving gladiators adapt without betraying core discipline. This is Patrick's market approach. He doesn't lock into single battlefields. Trades futures, Forex, cryptocurrencies, equities, but in each wields same weapons, market profile, volume profile, fixed rules, sharpened to fit the ground. Patrick's system beauty is universal, not careless. He understands no two markets breathe alike. Futures reveal heartbeat through order flow. Forex hides it. No central order book, order flows mirage. Patrick doesn't force tools where they don't belong, instead adapts. Forex leans heavier on structure and volume zones from longer horizons. Futures drills into order flow surgically. Knows when listening to crowd roar, when ignoring echoes. How this plays practically. Trading DAX futures, Patrick sees every contract, every order. Switching to EUR/USD Forex, that data doesn't exist. Shifts focus to daily, weekly market profiles, looking for value areas holding multiple sessions. Same principles, different application. Weapon stays sharp, only stance changes. This adaptability is why he thrives in competitions where traders collapse after lucky streaks. Many lean on single edges working in one market type, one volatility season. Patrick builds edge on principles, not conditions. Value is value whether DAX, S&P, Euro, Bitcoin. Imbalance is imbalance whether futures or crypto. Weapons remain constant, stance shifts by arena. Patrick learned hard early. Tried trading crypto 2017 using exact S&P futures parameters. Result: 3 stopped trades consecutively. Bitcoin moves 5% hourly, while S&P might move 5% monthly. Same profile principles, but volatility required wider stops, different time frames, adjusted positions. Once adapted, caught 40% Bitcoin swing using same market profile concepts working in traditional markets. Picture him moving between battlefields. In futures listens closely. Order flow whispers where giants hide size. In Forex, ignores false noise, focusing on balance zones holding weeks. In crypto, respects wild swings, using profiles anchoring in storms, devouring weaker fighters. Doesn't pretend ground's same everywhere, studies, respects, then fights with same steel adjusted for terrain. This lesson most resist. Either scatter across markets without unifying strategy, or chain to single one, blind to limits. Patrick found middle path. Carries system strong enough working everywhere, flexible enough adapting where needed. That balance is why standing yearly on leaderboards while others fade seasonally. Here's subtle brilliance. Patrick never chases markets for thrills. Doesn't trade crypto because fashionable, Forex because flashy. Trades where tools give clarity. Arena chosen not by hype, but where profiles reveal cleanest structure, loudest pulse. This detachment keeps immune to distractions. Having mastered multiple markets, Patrick faced another question. How long should battles last? Fight short duels, intraday skirmishes, or wait for day-long campaigns? Next, we'll uncover why in high-stakes championships, Patrick chose swing bias, how time itself became his ally. The swing bias. The battlefield quiets momentarily. Fighters breathe, eyes darting for openings. Some rush into skirmishes, trading blows frantically, fighting for seconds, hoping for speed glory. Most cut down before dust settles. Then Patrick Nill, standing calm, sword lowered, watching entire arena patiently. Doesn't fight every heartbeat, waits for battles mattering, ones worth bleeding for. This is swing bias essence. In World Cup championships, Patrick discovered hidden truth. Intraday fights seductive but costly. Every skirmish carries fees, slippage, exhaustion. More swings, more arena taxes. In competition celebrating only returns, not effort. Those costs fatal. Patrick made strategic decision, shifted focus from minute to day-spanning battles. 1 to 5 day swings became preferred weapon. Conserved energy for setups strong enough justifying entry cost, strong enough tilting entire match favorably. Numbers tell story. In championship accounts, Patrick averages 3 to 5 weekly trades, compared to day traders making 3 to 5 daily, yet returns consistently outpace. Why? Each swing captures 2 to 5% moves, while day traders fight over 0.2, 0.5% commission-eaten moves. Simple math most ignore in action hunger. Imagine required discipline. Leaderboards tempt daily. Names leap ahead with wild intraday trades, posting 50% hourly gains. Crowds roar, commentators whisper brilliance. Patrick doesn't flinch. Knows arena's seen this before. Week later, those names vanish, erased by same speed elevating them. Patrick remains steady, advancing step by step. Swing bias protects from fleeting fame trap. Swing trading isn't laziness, it's time leverage. Patrick understands structure takes time developing. Value areas don't shift single candles, breathe over sessions. Volume doesn't lie seconds, accumulates waves. Aligning with rhythms, Patrick trades not against noise, but meaningful auction shifts. Entries fewer, but each carries probability weight favoring him. Psychology's at play. Intraday demands instant reaction, endless attention, emotional stamina burning out strong traders. Swing bias allows detachment. Prepares plan, defines levels, sets risk, lets markets unfold. Doesn't need staring screens constantly. Trusts preparation, trusts rules. Detachment preserves mental capital equally as financial. Patrick puts it, day trading fights markets' mood swings. Swing trading rides its decisions. That perspective shift changes everything. Results prove wisdom. In multiple championships, Patrick's climb wasn't violent spikes, but steady ascents. Competitors lit boards spectacularly only vanishing, while Patrick's equity climbed staircase-like, step by step, swing by swing. That consistency separates surviving gladiators from brief entertainers. But swing bias isn't just holding longer, it's philosophy. Choose battles mattering. Don't waste energy in draining fights. In trading like arenas, survival isn't swing frequency, but wisdom choosing when striking. Yet choosing when striking is half battle. Greater challenge knowing how much strength committing. Next, we'll enter Patrick's risk calibration. How adjusting exposure depending battlefields, why sizing trades may be most decisive edge. Question. Separating amateurs from professionals. Know exactly what account percentage risking next trade and why that amount. If thinking about it, type calibrate below, because what's next might save your account. Risk calibration. The arena's never fair. Some fights are even duels, others bloodbaths against overwhelming odds. Gladiators spending same strength every fight don't last. Must know when conserving, unleashing, walking away. Patrick approaches risk similarly, doesn't treat trades equally. Calibrates risk surgically, adjusting whether battling in championship spectacles or private account discipline. In World Cup championships, arenas demand extraordinary. Standing on podiums doesn't need 10-20% gains. Need triple digits, 100%, sometimes 200, more occasionally. Reaching those, Patrick accepts risk must rise. Competitions risk 3-5% per trade, sometimes pushing 8% highest conviction setups. Private accounts, never exceeding 1-2%, usually closer 0.5%. Not recklessness, adaptation to battlefields. This separation is genius. Many fail blurring lines, taste competition adrenaline, carry it home, or play too safe championships, never risking enough climbing leaderboards. Patrick draws sharp boundaries. Championship trading for glory, risk amplified fitting stage. Private trading for consistency, survival, growth measured decades, not months. One sword for arenas, another for workshops. Breaking down exact approach. Private $100,000 account, typical trade risks $1,000 or 1%. Stopped out stings, but doesn't wound. Championship $10,000 account, same setup might risk $500 or 5%. Setup identical, rules same, but risk calibrated to goals. Private goal, survive forever. Championship goal, achieve 100% CDU's returns yearly. Risk calibration isn't just betting amounts, it's thinking. Private accounts, Patrick asks, how ensuring alive tomorrow, next year, 10 years? Competition asks, how placing among top contenders quarterly, yearly? Both valid questions, answers demand different risk levels, brilliance never confusing them. Consider how many undone by failure, win big once, assume same aggression carries forward, or cling caution, never daring achieving greatness. Patrick embodies balance, bold championships, disciplined home. Treats risk not fixed number, but living variable shaped by context. Patrick's saying students never forget, risk like stereo volume. Living room, keep comfortable. On stage, turn up. But blasting living room or whispering stage, you've missed point entirely. Here lies deeper wisdom. Risk calibration isn't cowardice nor bravado. It's respect. Respect for games playing, accounts protecting, goals chasing. In trading as combat, survival isn't fighting hardest always. It's knowing which battles require full strength, which demand restraint. Patrick's story teaches risk isn't dial set once. It's instrument tuning repeatedly. Every market condition, account, competition has own rhythm. Failing to recalibrate like gladiators swinging blindly, wasting strength trivial blows. Patrick calibrates, conserves, explodes when moment's right. But calibration alone, insufficient. Real test when temptation whispers, markets lure breaking rules doubling down. Next, we'll relive Patrick's darkest lesson, 2020 oil crash, where bending own rules nearly cost everything. How that scar forged unshakable principles. Scaling and rule breaking. The battlefield's unforgiving to arrogance. Gladiators feeling invincible after victories, convinced overpowering combat laws. That's when hubris strikes hardest, fighters believing they bend survival rules. Patrick knows this truth, not theory, but scar. Reminder came during darkest trading episodes. April 2020 oil crash. Began innocently, logically, crude falling steadily as world shut pandemic. At $30 barrel, seemed absurdly cheap. Years oil traded 10 times higher. Can't go lower, Patrick and team thought. Began buying. Price slipped $10, broke cardinal rule, no scaling beyond plan. Told themselves logic undeniable. This gift must rebound. Bought more. Hit $8, broke rule again. Surely bottom. More contracts. At $5, position swelled 3 times intended size. Crowds roared blood, but Arena hadn't finished cruel play. What happened next? Unthinkable. April 20th, 2020, oil went negative, minus 37 to 63. Idea barrel worth less than nothing, shattered assumptions. Brokers unprepared, data feeds glitched, screens surreal. Traders worldwide obliterated, some losing not just accounts, but owing brokers. Patrick's team escaped only because finally pulled plug $3, liquidating 70% loss before abyss swallowed whole. Lesson carved deep. Scaling without rule isn't strategy. It's vanity. Illusion of control, belief you're smarter than markets, laws, supply, demand bend to conviction. Truth, every additional contract dug blade deeper own side. Survival came, not brilliance, but finally obeying ignored truth. Rules exist following, not bending. Patrick speaks openly about wound. Interviews admits. That day taught market remains irrational, longer than you remain solvent. Thought being logical, really being arrogant. Market doesn't care what price should be, only cares what is. Patrick tracks everything now. Scaling rules written stone. Maximum 3 increments, predetermined levels, total risk never exceeding original plan, no exceptions. Even when logic screams lifetime opportunity, rules hold firm. Learned moments when rules feel most bendable, precisely when must be most rigid. This case study why Patrick's students remember him, less victories than scars. Oil crash retold not shame, but scripture. Proves even champions bleed. Discipline isn't optional, it's oxygen. Breaking scaling rule nearly ended him. Memory keeps sharper than winds could. So, facing markets now, Patrick doesn't ask, what feels cheap? Seems obvious. Asks, does setup meet conditions? Scaling align structure? If not, do nothing. That restraint, forged pain, allows returning repeatedly leaderboards while others vanish. But oil wasn't only beast lurking, days when entire markets turn monsters, black swans descending without warning, tearing through traders like lions through unprepared. How Patrick defends against unknown, unimaginable? Next, we'll step into Black Swan defense philosophy. See why sometimes bravest arena move is standing still. Black Swan defense. The battlefield has beasts. Lions released without warning, arrow storms from above, sudden arena floor collapses. No gladiator predicts them, but every must survive. In trading, these are black swans, events so rare, violent they rip through accounts, leaving skilled fighters sprawled. Patrick knows these monsters, has scars from oil negative, watched others destroyed by Swiss National Bank's Euro peg removal, January 15, 2015, when EUR-CHF fell 30% minutes. Defense isn't predicting beasts, but building systems respecting existence. Patrick's first Black Swan defense rule's simple. Know which arenas too dangerous entering. Central bank meetings aren't battles, they're ambushes. Swings too violent, gaps too large. No stop-loss guarantees safety. Traders positioning before Fed announcements or ECB meetings aren't strategists. They're gamblers walking into lion jaws. Patrick refuses those fights, closes positions before major central bank events, drinks coffee, lets markets explode, waits dust settling. Discipline saved countless times. Other news treated differently. Employment data, inflation, smaller reports, traded if approached carefully. Patrick uses them not guessing results, but hunting liquidity. Studies where stops likely clustered, where markets built trapped position pools. Then instead, gambling on number outcomes, places orders near pools, knowing regardless what news reveals, markets often sweep liquidity first. Specific playbook example. Before non-farm payrolls, Patrick identifies retail stop clusters, usually beyond previous day's highs-lows. Places orders slightly beyond levels, not betting employment numbers, but markets stop hunting tendency before choosing real directions. May 2023, approach caught 40 pip EUR USD sweep, reversing within minutes. Small win, but consistent, systematic. Mindset reflects deeper philosophy, survival over spectacle. Patrick doesn't believe traders should catch every dramatic move. Knows markets reward those living the fighting another day. If avoiding central bank events means missing potential fortunes, so be it. Missing fortunes painful, never fatal. Chasing black swans, losing everything is final. For Patrick, line between pain and finality clear. Think oil crash again. Had Patrick refused bending rules, avoided scaling, black swan negative oil wouldn't nearly gut him. Scar-taught survival isn't sharpest sword. It's knowing when sheathing. Gladiators fighting every beast won't live becoming legends. Patrick has never trade events list posted above monitors. FOMC meetings, ECB decisions, BOJ interventions, major elections, unscheduled central bank announcements. During these, he's flat. No positions, exposure, exceptions. Calls it paying insurance to market gods. Premium missed opportunity, coverage survival. This why Patrick endured. Edge isn't only reading profiles or crafting rules, it's humility. Admits forces too big, events too chaotic, arenas too dangerous. Avoids them, not fear, but wisdom. Students ask, what if misyears move? Reply consistent, always another move, not always another account. Black Swan defense is armor protecting gladiators from unseen. Not flashy, doesn't win crowd applause, but ensures walking out alive. In trading, being alive tomorrow, ultimate victory. Yet, survival, insufficient winning championships. Climbing leaderboards yearly, Patrick needed more than defense, needed consistency. Next, we'll see how focus on gradual, relentless growth, rather than lucky explosions, became cornerstone of battlefield legacy. Consistency over lucky shots. The battlefield loves spectacle. Crowds roar loudest when fighters charge wildly, swinging abandon, striking lucky blows, toppling opponents seconds. Momentarily, arenas shake applause. But dust clearing, fighters exhausted, exposed, often cut down next rounds. That's fate of traders chasing lucky shots. Patrick watched them rise like comets on World Cup leaderboards. 150%, 200% weekly gains, only disappearing quickly, erased by same recklessness fueling ascents. Patrick's path quieter. Equity curve doesn't spike fireworks, climbs staircase. Each step measured, deliberate, built on structure, volume, rule-based execution. Doesn't rely one massive trade defining years. Instead, lets dozens disciplined trades compound into something greater than luck could. Why his name returns leaderboards yearly, long after shooting stars burned out. Statistics prove point. 2022 World Cup Championship, trader leading month 1 with 180% return finished year, down 45%. Trader 15th place with steady 20% return, finished second overall 145%. Patrick sees pattern repeating yearly. Rabbits sprint, tortoises endure, time crowns discipline over luck. Consistency isn't glamorous, doesn't make headlines, doesn't feed ego like triple-digit daily wins might. But battlefields, glory without survival, meaningless. Patrick understands deeply. Traders' measure isn't how high flying weekly, but standing after year, 5 years, decade. Why publishes not just gains, but trade counts, drawdowns, equity curves, numbers proving endurance, not just brilliance flashes. Means ignoring temptation, sizing up recklessly chasing leaderboard spikes. Accepting may never win crowds' instant admiration. Steady growth doesn't look dramatic real time, but also means when others fade obscurity, you remain. That's victory Patrick seeks. Slow roar respect earned years, not fleeting cheer one lucky strike. Patrick explains with Mentor Tom's metaphor. Trading like building brick walls. Can throw all bricks once hoping right place, or lay one by one, level by level. First approach might occasionally create wall-looking things, but first, strong wind knocks down. Second, takes patience, builds lasting. Consider consistency psychology. Luck breeds overconfidence, convincing traders finding secret keys. Consistency breeds humility. Teaching edges aren't divine inspiration, but human discipline. Patrick embodies humility. Winning doesn't boast brilliance, credits process. Losing doesn't curse markets, reviews rules. Mindset keeps steady on tightropes while others swing wildly falling. Crowds rarely notice consistency momentarily, but over time, can't ignore. Just as gladiators surviving battle after battle become legends, Patrick's repeated top rankings prove edge isn't lucky, sword strikes but enduring systems. Victories aren't accidents, they're inevitabilities born repetition. But consistency doesn't mean rigidity. Gladiators can't fight every battle identically, nor traders. Sometimes edges lie rules and structure, sometimes flexibility, human minds. Next, we'll explore how Patrick balances mechanical precision with discretionary judgment, Why ability walking both paths makes rare warrior in trading worlds. Quick reality check. How many winning months last year? Not trades, months. If less than 8 of 12, comment consistency below. Next chapter shows building systems delivering month after month. Mechanical vs discretionary. The battlefield has two fighter kinds. Some move machine-like, drilled endlessly, strikes predictable but efficient. Others fight instinctively, improvising chaos, reading opponent eyes, adjusting fly. Both approaches have strengths, weaknesses. Trading, these archetypes become mechanical and discretionary traders. Most cling one side. Patrick walks razor's edge between. Mechanical trading is rules and replication language. Allows trading many markets simultaneously, letting systems execute without fatigue or emotion. Scales, multiplies, doesn't waver fear or greed. Patrick embraces this game side. Fixed price action rules, reliance volume market profiles, all coded, tested, verified. This sense fights like disciplined legionnaire, moves drilled muscle memory, steps part larger formations. But Patrick knows battlefields don't always follow scripts. Markets breathe, shift, sometimes whisper truths no machine detects. Here, discretionary edge emerges. After 10,000 screen hours, developed market feel. Ability sensing when something doesn't align. Setups technically valid, but context feels off. Instead, dismissing intuition tracks it. Journals gut feelings, compares against outcomes, slowly transforms instinct into data. Every time Patrick has feeling about trades differing from mechanical rules, records separate journal column. Mechanical signal, yes. Gut feeling, no. Tracks both outcomes. What would have happened following rules, what actually happened. After 500 trades, data revealed fascinating. Mechanical system and discretion aligned, 72% win rate. Conflicted, dropped 41%. Turned intuition into measurable edge. This balance rare. Most fall traps. Purely mechanical lose touch with market's living pulse. Missing shifts, no backtest anticipates. Purely discretionary drift subjectivity. Rationalizing decisions, drowning in consistency. Patrick bridges gap. Lets machines carry loads where rules clear, probabilities strong, reserves discretion for nuance, moments human judgment outpaces code. Picture battlefield again. Stance disciplined, form drilled, but eyes alive, scanning opponents for subtle tells. Doesn't abandon formation, ready breaking rank if context demands. Strength lies ability returning structure after every improvisation. Rules remain anchor, even when instinct briefly guides blade. Patrick describes perfectly. Mechanical gives consistency. Discretionary gives adaptability. Need both surviving long term. Like driving cars, follow traffic rules mechanically. Still need judgment, avoiding drunk drivers swerving lanes. Lesson profound. Trading isn't binary choice between machine and man. It's spectrum. Closer moving objectivity, safer edge. But remains place human discretion, if only willing tracking, measuring, holding accountable like other rules. Patrick doesn't worship instincts nor suppress. Disciplines them. That discipline allows thriving multiple markets, across years, against competitors often collapsing into extremes. Not fully machine nor purely improviser. Hybrid, strategist knowing when trusting code, when trusting seasoned eyes. Yet balance raises deeper question. How weaving all elements, structure, volume, rules, risk, discretion, into single coherent systems. Next, we'll see Patrick layers strategies into three-tiered fortresses. Structures protecting from chaos while allowing precision attacks. Strategy, layering. The battlefield isn't one single weapons. Gladiators relying only swords undone by arrows. Carrying only shields trampled by speed. Victory comes layers, defense, offense, awareness, stacked, so no single weakness brings death. Patrick builds trading strategies same way. Doesn't lean one tool, concept, rule, layers them, each protecting empowering other, until systems become fortress in chaos. Foundation is market profile, his map, battlefield blueprint. Shows where buyer-seller auctions found balance, where imbalance waiting emergence. Without structure, fights blind. With it, Patrick knows where value lies. Opportunity might erupt. A top map lays volume profile heartbeat. If market profile terrain, volume profile pulse of armies clashing upon. High volume nodes show soldiers dug trenches, unwilling leaving. Low volume zones gaps in defense. Soft underbelly price slices through quickly. Combining structure and pulse, Patrick creates double filter. Won't trade unless both map and heartbeat align. Even dual layer insufficient. Third shield, fixed price action rules. Rules transform analysis into execution. Define exactly what valid signals look like, what must happen before entering, how risk placed. Without rules, structure and volume open interpretation, subject to feeling whims. With them, Fortress becomes airtight. No trade passes unless meeting all three layers. Exactly how works practice. Layer 1. Market profile shows value between 4,500, 4,520 S&P. Layer 2. Volume. Profile reveals low volume gap, 4,520, 4,535. Layer 3. Price action shows engulfing candle closing above 4,520, with volume 200% above average. All three confirm this trade. Even one layer says no. Patrick doesn't trade. Black and white. Think Fortress Gate with three guards. First checks map, market-aligned value areas. Second checks pulse, volume confirming. Third checks code, price action rules permit entry. Only all three nodding agreement, Patrick draws sword. Anything less, gate remains shut. Layering creates resilience. Market profile misleads. Volume profile catches flaw. Volume looks strong, but price action doesn't confirm. Rules halt trade. No single error destroys system, because every decision cross-checked multiple defenses. Why Patrick endures where others collapse after mistakes. Fortress absorbs shocks, filters noise, prevents reckless entries. Patrick tested empirically. Back-tested each layer individually over 1,000 trades. Market profile alone, 52% win rate. Volume profile alone, 54%. Price action rules alone, 51%. All three aligned, 71% win rate with 2.1.1 reward risk. Layers don't just add, multiply. Yet strategy layering isn't only defense, also sharpens attack. All three layers align, structure pointing imbalance, volume confirming, price action triggering. Patrick knows trade carries uncommon strength. Moment he commits, scales conviction. Fortress filtering many false setups now channels energy into precise strikes. That's consistency built, not trading often, but only when Fortress says yes. For new traders, philosophy transformative. Teaches no single tool enough. Indicators without structure noise. Structure without rules vague. Rules without context brittle. Layered together, form systems bending with markets yet not breaking. But Fortress wasn't built alone. No gladiator survives years' battlefields without allies. Mentors sharpening blades. Comrades watching backs. Next, we'll see how mentorship and knowledge compounding turn Patrick's method from theory into mastery. Why no trader should walk arenas alone. Mentorship and knowledge. Compounding. The battlefield may glorify lone gladiators, solitary figures standing bloodied unbowed. Yet behind every survivor, teachers, sparring partners, comrades, sharpened edges long before facing crowds. Trading no different. Though fought alone screens, mastery rarely achieved isolation. Patrick's rise shaped mentorship and relentless knowledge compounding, layer upon layer, until discipline became instinct. Patrick speaks of Tom, mentor already walking paths, over 15 years markets, enduring cycles, witnessing triumphs and disasters. Patrick didn't merely attend single seminars, declaring trained. Immersed workshop after workshop, mentoring session after session, often repeating same material 20 times. Why? Each pass revealed new nuance, previously invisible detail, insight only clear after enough screen time. Knowledge wasn't absorbed single flash, compounded like interest, growing richer through repetition. Numbers tell compounding story. First workshop. Patrick understood maybe 30% concepts. Fifth, 60%. 10th, 85%. 20th. Wasn't just understanding, seeing patterns within patterns, exceptions to rules, wisdom behind exceptions. what looked repetition actually deepening, like spiral staircases where each revolution takes higher though covering same ground. Compounding created transformation. First, Patrick learning rules. Over time, seeing principles behind rules. Later, understanding when exceptions considered, when never tolerated. Each exposure layer deepened perspective. Like gladiators drilling same moves repeatedly until muscle memory, Patrick practiced craft until execution second nature. But mentorship provided more than knowledge, provided accountability. Alone, traders convinced themselves bending rules harmless. One exception won't matter. Mentors strip illusions. Tom's presence, team camaraderie, created environments where discipline reinforced not just personal willpower, but shared expectation. Sitting offices, listening conversations, absorbing professional language, constant immersion, shaped Patrick ways solitary study never could. Tom had ritual Patrick still practices. Every Friday, traders present worst weekly trades to groups. Not best, worst. Dissect what went wrong, rules bent broken, lessons emerged. Brutal honesty performed publicly made accountability unavoidable. Patrick credits single practice preventing countless future mistakes. Teams also broke loneliness curse, trading isolating pursuit, mental dungeons where doubt echoes endlessly. Joining like-minded fighters, Patrick found perspective. Losses weren't personal failures, but lessons dissected collectively. Wins weren't arrogance reasons, but proofs examined, refined. Communal environments allowed knowledge accelerating. Every trader's scar became shared lesson. Effect visible. Patrick's philosophy doesn't claim self-made romantically. Self-forged, yes, but fire-tempering stoked mentors and comrades. Humility why still treats learning lifelong pursuit. Even now, after leaderboard years, admits entire domains, options, bonds, institutional flows, could study decades more. Sees trading not destination, but endless knowledge compounding, layer upon layer, sharpening blades forever. For aspiring traders, lesson clear. Don't underestimate repetition, power, environment, mentorship. Reading one book, watching video, attending seminar won't transform. Immersing, practicing relentlessly, surrounding with those ahead. That's how compounding skill until becomes edge. Leads natural question. After all layering, structure, volume, rules, risk, discretion, mentorship, what complete championship playbook looks? How Patrick brings together when spotlight's on, battlefields demand victory. Final chapter. We'll step into competition and playbook. Distilled essence world champion strategy. The championship playbook. The battlefield grows silent. Dust hangs in the air. The crowds lean forward, waiting to see which fighter emerges victorious. This is the World Cup Trading Championship stage, where every move is magnified, where one slip erases months of work, where one disciplined strike crowns champions. After years of scars, study, and survival, Patrick has forged his playbook for this moment. A blueprint uniting every strategy layer into one coherent whole. At the core of his playbook lies a paradox. To win, you must risk more than you ever would privately. In personal accounts, Patrick aims for steady growth, rarely exposing himself to unnecessary danger. But in championship arenas, the scoreboards demand triple-digit returns. Gladiators who fight cautiously never hear the crowds chanting their names. So, Patrick calibrates carefully. He sizes his trades larger. He embraces greater swings. But he never abandons his structure. It's all about balance. Aggressive enough to climb the leaderboards, yet disciplined enough to avoid destruction. Here's the exact championship formula. Start with $10,000. Target, 200% return in 12 months. This requires roughly 10% monthly compounding. With 3 to 5 weekly trades, each needs to deliver 2 to 3% when winning. With a 65% win rate and a 2-to-1 reward-risk ratio, the math works. But only if every single rule is followed without exception. The process begins with market profile. Sunday nights, Patrick maps the weekly structure of core markets, ES, DAX, Eurodollar, and crude oil. He identifies where value sits, where it might migrate, and where the balance edges lie. This takes 3 focused hours before markets open. Monday morning, the volume profile speaks. Patrick overlays the volume map on his market profile structure, looking for confluences, places where both tools agree opportunity exists. These become the hunting grounds for the week, not entire markets, but specific zones where probability tilts favorably. Then comes execution. Only after market and volume profiles align does he turn to his fixed price action rules. No excitement or temptation overrides the rules. Championship rules are stricter than private trading rules. This is where discipline becomes destiny. Competition needs higher probability setups justifying larger risk. Regular accounts need 2 confirmations, championships need 3. During championships, Patrick focuses 1 to 5 day swings. Intraday duels drain fees and energy. Scoreboards punish wasted effort. Holding days let structure play out. Volume prove itself. Probability compound. Trades fewer but sharper. Designed not constant action thrill, but consistent execution impact. Risk management championships counterintuitive. While risking more per trade, 3-5% versus 1% privately, actually trades less frequently. Quality over quantity becomes more critical when every trade carries championship-level risk. One bad overtrading weekend's championship runs. One good patient, high-quality setup week secures podium positions. Throughout, consistency remains playbook spine. Ignores competitor fireworks leaping 200% weekly. Knowing most, vanish quickly. Championship equity curves show same staircase patterns, private accounts, just steeper steps. Patience' deadliest weapon, ensures always present when others gone. Final piece mindset. Patrick enters arenas knowing losses come, black swans strike, luck crowns some daily. Also knows fortress-layered strategy, calibrated risk, unbreakable rules, relentless consistency gives something rarer than luck, inevitability. Over time, scoreboards bend favorably because ref uses bending for them. This championship playbook essence, simplicity tools wielded precisely, risk-adjusted battlefields never confused private goals, swings chosen over skirmishes, patience over frenzy, consistency prioritized over spectacle, mindset anchored humility, disciplined survival. Patrick doesn't win because secret tricks or glorious strikes. Wins because playbook ensures still standing when dust clears, year after year, long after lucky one's forgotten. Become the strategist, not the spectator. You've walked battlefields with Patrick Nill, seen dust, scars, triumphs, rules separating burnouts from endurers. Now standing arena edge, spotlight turns you, crowds watching, markets moving. Question no longer Patrick's playbook. It's yours. Too many stand outside gates, spectating, scrolling charts like watching gladiators from stands. Cheer wins, gasp losses, return own trading with no structure, discipline, defense. Want glory not scars, prizes not preparation. Markets devour them. You know, because maybe been there, chasing lucky shots, bending rules, scaling disasters, watching equity vanish like sand through hands. But today seen another way. Seen survival comes not complexity, but simplicity wielded precisely. Seen 2 tools, market profile, volume profile, become sharper than dozen indicators paired fixed rules. Seen consistency builds legacies while luck builds tombstones. Seen risk must calibrate battlefields, not left whim. Here's challenge, specific. Tonight before sleeping, open trading journal. Don't have one, create. Write last 5 trades. Next each, answer 3 questions. First, did trade follow predefined rules or made up going? Second, knew exact dollar risk before entering. Third, would take exact trade again if same setup appeared tomorrow. Answer no, any, found first leak fixing. Not about copying Patrick's every move, about embracing philosophy. Fewer tools, stronger discipline, relentless consistency. About turning trading from gambles into craft, lottery tickets into legacy. Tomorrow morning, strip charts just price and volume. No indicators, lines drawn, redrawn, noise. Can still see story markets telling. Identify where value sits, volume confirms, opportunity might emerge. If not ready adding anything back. Master foundations before decorating houses. If serious transformation, 30-day challenge. 1 month, trade only when 3 conditions align. Market profile shows imbalance. Volume profile confirms unusual activity. Price action gives clear signal-based advanced written rules. Not feelings, hunches, looks good. Written rules, measurable conditions, objective triggers. Track every trade, even not taken. After 30 days, review data. Let numbers tell if discipline pays. Don't need winning World Cups tomorrow. Need surviving today, improving tomorrow, staying alive, enough letting consistency crown. Crowds may not roar every small step, but one day, enduring, they'll look up seeing name leaderboards. Knowing wasn't luck, was inevitability. Patrick's journey started teenager watching .com bubbles, unable participating but burning desire. Years later, sold company, ignored doubters, stepped arenas. Didn't have secret formulas or inside information. Had discipline, rules, wisdom following, even when emotions screamed otherwise. Step into arenas, build fortresses, become strategists, not spectators. Remember, markets reward not swinging hardest, but standing when dust clears. Final thought carrying. Every champion once beginner, refusing giving up. Every master once disaster, keeping learning. Every legend once unknown, fighting silence while crowds watched others. Journey starts not perfection, but decisions beginning. Building one rule, following one week, then another. Until discipline becomes edge, consistency becomes signature. Battlefields await. Question not whether facing losses, struggles, doubt moments. Will. Question whether facing as gamblers, hoping luck, or strategists armed structure, prepared war, destined enduring. Welcome arenas. Go build playbooks.